$9,400. This is showing as sales in 2013, and that is affecting that number, isn't it? But we don't have that cash. Remember, the whole purpose of this is to take our net income and from that calculate our cash. This money is up here in this number, but do we have it yet? So do you see how we have to subtract cash? Does that make sense? Because we're going from our net income to determine our cash. So that's why we have to subtract 4,400, because that number's up here, but we don't have it. Make sense?
Wait, so did you subtract the difference because that 5,000 you're going to get this year?
That 5,000 came in.
The 4,400 didn't.
The 9,400 didn't.
So no, 5,000 you just increase your accounts receivable by 44.
No, that because it's the operating cycle, you would have received
Oh.
a year, but there was just another 9,400 that you still have yet to receive.
You know, so the difference is really this money showing up here. This money showed in the previous year, probably came in this year, but since it's gone up, this extra 4,400, we need to subtract it from our net income because that 9,400 is in here. Make sense?
Right. You only have 5,000 of that 9,400.
Because chances are it came in the period.
Right.
Accounts receivable kind of needs to come in. Where are my glasses? Oh, here they are. Okay. Am I confusing you guys? I would rather take all the time in the world to help you understand it because I didn't get that. So I just had my little rig sheet and I didn't really get it. I just knew if this increased, I did this. I didn't even get why. So that was my hardest thing in all of accounting was this dumb cash flow statement. I don't know why. Okay, so what do we want to do here? We want to increase in income taxes payable. Think of this. Our income taxes payable in 1 year was $3,000, the beginning of the year. The end of the year, it's $6,500. That payable represents an expense, doesn't it? So in our net income figure, think of it through, that $6,500's in there, but we didn't pay it yet. So that's why we want to add that back. Make sense? So when a payable is increased, we're going to add. When a payable is decreased, we're subtracting. Okay? So in this case, increase in income taxes payable, we're going to add $3,500. Then we've got, and then this is a less. This is an add. Less, if we have an increase in accounts receivable, remember it's up there in that net income figure, but we haven't gotten it yet. So we're going to subtract the 4,400. Then we've got an increase in inventory. We're going to subtract 10,033. Anytime there's an increase in an asset, you're going to subtract it. When there's a decrease in an asset, you're going to add it. Increase in inventories, then a decrease in accounts payable. We're going to subtract it. Okay? So if you start the year with a higher accounts payable and you end the year with a lower accounts payable, you've got to subtract your cash because that payable was for an expense in the previous year. Okay? Yet we had to pay it out now in this year. Does that make sense, guys? So now we have net cash provided by operating activities of 67.9. And next is investing activities. You just tell me when you're ready, because I feel like I'm going too fast. How you guys doing? Can I go on, or do you want me to wait a minute? Go on. So now let's look at our investing activities, guys. Remember when we were looking here, we saw a couple things that were related to investments? Purchase of building, long-term investments, purchase of equipment, purchase of land. What do you think about all those, guys? That's related to investing activities. So payment for the purchase of building is $65,000. Think about it, guys. Our net income does nothing to reflect that building, does it? That's why we need to subtract it, because we're trying to come up with cash. Nothing about our net income relates to that building. Then we have payment for purchase of equipment. How much was that?
8,000.
Next was payment for purchase of land. How much was that?
9,700.
Then we have receipt from sale of long-term investment. How much was that? $10,600. Think of that long-term investment as an asset. So when we received that money, it didn't play out in the income statement at all. So we now have net cash used for investing activities $72,100. How many of you guys are following me? Then, what's our last one? Financing activities. Let's look back at this. What do we have in financing, guys? Dividends paid, receipt from sale of common stock, receipt from sale of preferred stock, right? So let's look here, and our financing activities. How do I make this page bigger? Well,
Increase the magnification.
there. Thank you. So we are going to do what with the dividend? Does cash increase or decrease when we paid out that dividend? Decrease of dividends minus 24.5. Went receipt from issuance of common stock. What happens? Does our money go up or down? Up. 12.3. How about the preferred stock? That is 20. So this is net cash provided by financing activities, because we got more. 7,800. So then we've got something called net increase in cash. Our net increase in cash is going to be this plus this plus this, 3,600. What was our cash at the beginning of the period?
18,000.
$21,600. How are you guys doing with that? Do you want me to go over another problem like this? Are you guys good? You tell me. I'm here. I'm at your beck and call. Almost.
Just have to think logically in that part sometimes.
Well,
Can you review what you added together for the net increase?
for the net income,
No, increase in cash, the 3,600.
That's the total.
that increase in cash was
All right,
the net cash.
I didn't have a minus somewhere, so.
It's
all
okay.
in that column.
The 67,900 minus the 72,100
Everything in that
plus the
column.
7,800, correct,
Okay, perfect.
gave me this.
I didn't have a minus on it.
That's okay.
On the books example, they show add everything and then less for the,
They do. And you can do it either way. Whatever you want to do,
okay.
you can add everything for operating and then less. They were kind of separating out non-cash items and then the changes of assets. So
Okay.
it doesn't matter. Either way is just fine with me. So for the key I want you to understand with this chapter is understanding the income statement. You'll have a problem on that, unless you want a problem on the cash flow statement. I think the income statement's easier. But know what the components are of a cash flow statement. And know what's in the cash flow statement. So what components are in the financing activities, okay? How's everyone doing?